I'm Sarah Borkson-Keeter with NAREITsREIT.com and welcome to Quick Study, a monthly review of REIT market developments. I'm joined by my colleague Brad Case, NAREIT's Senior Vice President for Research and Industry Information. So Brad, after a very strong first quarter, REITs lost ground in April. What was the factor behind that?
Yeah, it was a difficult month for REIT investors. REIT investors saw their total returns down 4.7% during the month of April. It wasn't really a good month for investors in any asset class. Small cap stocks were down more than 2.5%. Large cap stocks were up by less than 1%. But for REIT investors, we really saw what happened during April took away the gains that we had built up during the first quarter of the year. REITs are now down on the year by less than 1%, whereas the rest of the stock market is up on the year. So it was a difficult month for REIT investors. What we have to keep in mind is that during bull markets, it's common to see a month or even a quarter of negative performance during the longer bull market. So the fact that we saw REITs do so badly in April relative to some of the other assets out there doesn't mean that the bull market is over.
And what were some of the factors weighing on the market in April?
Well, it's hard to tell, but I suspect that the two most important were, number one, concerns about the strength of the macroeconomic recovery, whether it might be softening, and number two, concerns that interest rates might be raised might go up later in the year. I actually think that both of those concerns are somewhat misplaced. If we look at the macroeconomic situation, we have to keep in mind that the demand conditions in the macroeconomy affect the rest of the stock market, but in the real estate market, what's more important is the supply conditions. What really differentiates real estate from other companies in the economy is that it takes so long to ramp up new construction. And in fact, in really every property type nationwide, we're still under replacement levels of new construction, under normal levels. So we're nowhere near an overconstructed situation, which is usually what leads to really softness in the commercial real estate market. With respect to interest rates, it's a little bit of a conundrum, because if the economy is softening, then that will generally cause interest rates to go down. If interest rates are going to go up, it's because of strength in the macroeconomy. And indeed, historically speaking, generally when interest rates go up, that's good news for REIT investors. Because the economy is stronger, occupancy rates are higher, rent growth is higher, the value of commercial properties is higher, and therefore REIT returns are positive.
And looking more broadly, are there any other positive factors that you're looking at right now?
Yeah, I think there are several positive factors. I mean, one thing, for example, is if you look at capital raising during the first quarter of this year, REITs raised more than $22 billion of new capital. And historically what we've seen is that REITs have made very good use of capital that they've acquired, whether it's corporate debt or common stock or other, whatever form of capital. They've used that to make good acquisitions. So I think what we're seeing is REITs preparing to make acquisitions that are likely to increase their earnings going forward. If you look at segments of the markets where you saw good news, I mean, among the only segments of the REIT market that actually were in positive territory during April, the infrastructure segment was up. The companies that provide commercial mortgage financing did well during April. And then more generally, if you look at performance to date, you also see segments like the residential or apartment segment of the REIT market, which went down in April, but is still up fairly strongly during the year as a whole, as are self-storage REITs. So I think there are different pockets of good news, even during a month as tough for investors as April.
Well, thanks very much, Brad.
It's a pleasure.
And for more news and analysis on all things REIT, be sure to visit REIT.com.